Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe to the channel, and also make sure you check out my Patreon page, link down below. But essentially it's $8 a month. Follow along with my Patreon portfolio for Day Trading Fearless: stocks, options, dividend stocks, swing trades, long-term trades, things like that. But as always, let's jump right into this video. This video is how to use the stochastics, okay, with a 1 minute chart. We're going to take a look at the S&P Emini futures for this, and there's going to be two different ways that I'm going to show you of how you can use the stochastics, right? With the charts, right? And keep it simple. Trading, I think people make trading way too difficult, okay? But essentially we're going to use a 1 minute chart, okay? And for the stochastics, we're going to use 820 support resistance, right? Overbought, oversold, and then a 9-3, okay? And let me kind of click on here. So we're going to do the K period will be 9, the D period will be 3. For the fast K, we're actually going to hide it. So uncheck all these boxes, and then the fast D is going to be shown, right? So essentially this line is only a 3 period D that shows, okay? And what we're going to look for are two different types of trades. One of overbought, oversold, and then the second one will be for divergence, right? So let's kind of zoom in over here, okay? And what we're going to look for are overbought, oversold areas, right? When price gets oversold, meaning down here, right, is below the 20 period, okay? One way to look at this is wait for the oversold and then wait for price to come back up and one candle to close above, right? So in this instance, right, you could say, hey, we're kind of falling, right? We're moving lower. Price breaks above and we actually close one candle above. That would be your entry to get long. Now, with this strategy, one of the things is you have to let the trade play out. This isn't a quick scalp, right? Because a lot of times what will happen is you'll get a move here, right, where this candle closes, this line is now above, okay, the 20 period oversold. And what you're essentially looking for is a rotation all the way back up to the overbought. And that is essentially what the trade really is, right? Here's the problem with this. If you did this back here, right, where you want to wait for the oversold, right, we dip below, come back up, and you get long. Well, price had a steep fall and stair step lower. Well, by the time it got back to oversold or overbought, right, is up here or down here, right, at these levels. So what happened was you entered somewhere around here, but by the time you had the rotation, price was a lot lower, right? But in something like this, if you would have bought right here, because you see we got back above the oversold line, you would have gone long. Yes, you would have had a little bit of pain, okay? But then you had the rotation finally all the way back up to the overbought level, okay, and you actually would have had a nice winner. So it's really, you're really not managing risk, which isn't always a good thing, right? Because you don't know how far the stocks can go, things like that. But look at this, right? Go from oversold or overbought over here all the way, roll it down to oversold, and you would have had a nice reversal here. Oversold, right? Come back and remember, you wait for price for the line the stochastic to come back to overbought, you come over here, you wait for the candle to close with the where it curls back above the overbought or oversold level, and you get long and you just ride the wave out. And then at this level right about here is where you got above the oversold, and that would be your exit point. Okay. Me personally, I'm not a big fan of that. I'm just doing this to show you guys a different way to trade, right? That's what this video is about. What I personally like are the divergences, okay? So what I like to see are things like this, where we kind of fall, prices falling, stochastics falling. We get way oversold, right? You can, if you look over here, you'll see numbers, right? In gray, 17, 10. Okay, if we look over here, we get down to the level of like 6 or 7, right? Price rallies, and then we make new lows below this level. And as we're making new lows, you can then now see a divergence start to form, right? Because on this second push lower, the price is actually higher, right? On the stochastic. So what I like to do is I like to be able to watch for something get oversold, see the bounce in price also in the stochastic, a pullback, make a new lower low below the lowest price here, and then watch for the waterfall. Remember, the waterfall is just lower highs, continuous, right? And then the break above is where you can actually get long, okay? And this is also another variation of playing the rotation back up to the oversold level or overbought level, right? So what happens is price comes down, we break above, this green candle's the first candle that is broken above its previous candle, right? There you would get long, and you see the divergence, and you just kind of hold and ride this wave out until we get back to the overbought level, which would have been way up here. Okay, we got overbought somewhere over here, and that would have been your exit. Okay, now if you want to manage risk, you would have just put your stop one tick below this low, because whenever you see divergence like here, you very rarely or almost never, you don't want to see price break below there, right? If price breaks below, jump out. You're wrong on the trade. Protect your capital and move forward. But in this scenario, you actually had a double bottom, and then look at this double bottom with this divergence, right? And this was kind of telling you, okay, hey, even though we're falling, look at where the stochastic is. It's way up here, okay? Chances are, hey, if it breaks above, get long. If you weren't in it, okay? But if you are, that should be a telltale sign that, okay, yes, it looks ugly, price is falling, but the stochastic's way up here. There's really no selling pressure, and let me just hold on to it. And then as it moves up, you see the rotation all the way back up to the overbought level, and then that could be your target. So I hope this video helps you guys to identify how to trade with the stochastics on the 1 minute chart, looking for divergence or rotations of overbought, oversold. So thank you for watching as always, and until next time, we'll talk to you guys soon.